Hey everybody, Opendoor Technology, and to me, today was a great day. It was a great day. We held our support at $9.50. We called it on the last video. We need to hold $9.50 or $9. I said, if we hold $9.50, that's bullish. But if we hold $9, that's still good. But if we hold $9.50, that's great. And we held exactly $9.50. After hours, we're green. And guess what? We're still trading along with the housing market stocks. And that's what you want to do. If we're trading with the housing market stocks, it means we're doing great. Now, if the housing market stocks are going up and we're going down, then we got to look into that. But as long as we're trading with the trend of the housing market, we're doing good. So I'm going to show you the chart. I'm going to show you a few things that I saw on the internet that is pretty crazy. Check it out. All right, let's check out the daily. The RSI is looking decent. It went up and then it came down and now it's holding this line right here and starting to flatline a little bit. It means, people are starting to buy in this area. So if we can hold this area, we're good to go in the MACD. RSI is still pointing upward a little bit, which is pretty good. And of course, we're kind of overbought. The RSI is skyrocketing up there, but the MACD still looks decent. So I'm bullish. And here goes the hourly. As I said before, these blue lines I drew this, I think, last week, end of last week. I think it was Friday. And I haven't changed them all. I haven't changed them at all. And we're hitting it. We're hitting the support lines. As you can see, we went up today. Went up to what? $10.50, which was a resistance. I put $10.25 right here. I'm not going to change it, but we did break the $10.25 that I drew, and we went to $10.50, and we came down. So, we have resistance between $10.25 and $10.50. So we went up, and then we came down a lot, and we then consolidated in this area right here, and then we came down and came back up. But the support line is at the $9.50. So we did trade under the $9.50 for a while at the $9.30. But what happened? We closed above the support line, $9.50, and after hours, we're at $9.63. As you can see, the blue support line I drew last week, we're trading above it. So that's why I'm excited. That's why I'm happy, because we're trading above a support line. And what we want to do for tomorrow and the day after, we want to go up and trade around this area right here, the 980 and the 990 area. That's where we want to trade at in the next couple of days, 980, 990, if we don't break $10 and hold. What I like to see tomorrow is a break above 980 and close around 975, 980. That's bullish for me. That's bullish. But if we hold 950 tomorrow again, that's fine. But a close at 970 or 980 tomorrow is going to be a good day. If it breaks $10 and hold and close, even better. But 975, 980 is what I'm looking for tomorrow. But things are going to change. Reason why is because the rate cut. The rate cut, I think, is Wednesday, and that's going to be a huge catalyst. So we don't know what's going to happen. Either two things can happen. People may profit take when their rate cut decision comes out, or it may pump up. One of the two. I don't know what's going to happen. But as of right now, based on this chart, it's looking good. Looking really good. And here we go in the 5 minute. We consolidated in this area for a long time. And now after hours, we're trading above the consolidation. So that's bullish. That's going to be bullish right there. Because this consolidation pretty much means that people are loading up in this area, 930 to 950. Because why? We're trading above our consolidation after hours. So this could hit 975 pre-market or even after hours. Maybe not after hours. Could be too late for that. But maybe pre-market 975 open. That'd be great. Or we open up above 975. 975 is going to be key. If we break 975 and hold, then, that 980, $10 area should be in sight, right in focus for us to break. So what I was saying earlier, that we're trading with the housing market stocks, is right here. ITB, ETF for housing starts. It went down today. Let's see, Opendoor went hourly. Same thing. It went down. Only difference is that Opendoor pumped up in the beginning and then went down. ITB pretty much went straight down and then it consolidated. Opendoor went up, straight down, then consolidated. Let's look at Lennar. Same thing. Down, consolidated. D.R. Horton. down and consolidated. So the only difference is that Opendoor pumped up and then went down. Opendoor, along with ITB, Lennart, and DR Horton all consolidated the same time. See, look, consolidation right there, consolidation right there, Lennart consolidation, consolidation, and then consolidation. So we're moving along with the housing starts. So that's good news. That's good news. The reason why, because once good housing news comes out, housing data comes out, Opendoor is going to move up along with the housing stocks. So as long as we're trading with them, it's going to be good. It's going to be good. I'm not making any big price predictions for this week, really, because I don't know what's going to happen with the rate cut. Anything can happen. People could profit take. People could pump. People could profit take or could go higher. We got to see what's going to happen. And if Jerome Powell is speaking, we got to see what he's going to say. We got to see what he's going to say. That's usually more important than the rate cut decision, what Jerome Powell says. So if people do buy Opendoor during the rate cut or after the rate cut, this stock could go to about around 1070 and break it. Go to $11. And if it does, it probably won't see under $10 again. If people take profit for the rate cut, then we could see 875, 850 support come back and play again. Or we can hold at $9 again, either or. But what we want to do is, if it does go down, we want to consolidate between 950 and 850. That's going to be a good sign if we can consolidate between 850 and 950 for a while. If people do take profit for the rate cut decision, and once we consolidate and get stronger, then we'll probably never see under $10 again. That's just my opinion. So here we go. The news articles are coming out saying bad things about Opendoor. Opendoor, 2 reasons to sell and never look back. For what? Why? First bullet point. They said people are cheering Opendoor new CEO, but this optimism ignores the severe decay in the core iBuying business. The reason why there's severe decay is because the housing market is in bad shape right now. You can't judge an app or a business when the housing market is going down. Now, if you want to judge Opendoor when the housing market is booming and say the business model is not working, go ahead. You're free to do that. But the housing market is doing bad. Everybody else in the housing industry is going to do bad as well. So that first bullet point, it doesn't hold up for me. Acquisition volumes have collapsed by over 60% year over year. Once again, the housing market's not doing good. Nobody's doing good. Lennart's not doing good. DR Horton's not doing good. You know, that's just how it is. And I'm reading these bullet points, and pretty much all of these are saying things about Opendoor, negative things about Opendoor. But, you know, we haven't proven ourselves because the housing market is not doing well right now. It says, Opendoor is unproven, long-dated strategy born from the failure of the original model with no near-term path to profitability. Do you know how many companies that, you know, were down and out that had no path to profitability but found a way to a path to profitability and became a huge company? There's a lot of companies out there that didn't have any path to profitability or was not even profitable for a long time. There's a lot of companies out there in the beginning were not profitable for years and years and years. It takes time. It takes time. So just because a company's not profitable, don't be deterred because you're buying shares on the possibility of the company to flourish, not because their current state of profitability. And the last one, same thing. Management's own commentary and financial data from the Q2 2025. They're talking about the ex-CEO because remember the ex-CEO said bad things about Opendoor in the commentary on the earnings call. So she's not even there anymore. So I don't know why they're referring to that. A report revealed a business that is shrinking and becoming less profitable. Once again, judge Opendoor once the housing market gets back on its feet. Then I won't say a word. I won't say a word. So that's enough of that one because they're just being negative for no reason. And this is what I want to talk about because a lot of people are saying reducing the workforce is a negative for the company. That's not true when you're bringing AI into focus. Now, if there was no AI, yeah, okay, you know, the average company losing workforce may be a negative sign. What's the reason why they're losing their workforce? Because they're about to focus more on AI. Now, here's an example. You may think I'm lying or something, but look, here we go. Amazon's corporate workforce is expected to decrease in the coming years due to the extensive implementation of generative AI technology. That's Amazon. Apple is undergoing workforce changes related to its AI initiatives, including both job cuts in some areas and increased hiring and automation in others. Microsoft is significantly reducing its workforce, cutting nearly 4% of its global employees, around 9,000 people, in July 2025. And this goes on and on. I can bring more companies in focus that are reducing their workforce because of AI. So Opendoor reducing workforce is actually positive. Why? Because they're going to have more money on the balance sheet. And you'll see it in earnings once the new earnings comes out and the housing market starts to get better. You'll see this reflected on the earnings. So you can think that reduce their workforce is bad. That's your choice. But Amazon, Apple, Microsoft, probably Meta as well has reduced workforce. And it's a reason. It's a reason. So yeah, after hours, times and sales, $9.63 still. So like I said before, I'm not doing too much price prediction because, the cut is coming up. Anything happen. But after the cut, I'll start making some more predictions about the price. But when the cut happens, you better believe it. The stock market and Opendoor Technology is going to be volatile. A lot of volume going on when the Jerome Powell speaks and when the interest rate cut decision happens. And remember, we need to hold between 850 for a nice bullish consolidation. And if you have Discord, join the Discord. We need more people in Discord to talk about Opendoor Technology. It's going to get huge. Our Discord server is going to be huge, and we're making a lot of money in there. So look, subscribe, comment if you have any questions, join the Discord, and make sure you like this video. The more likes this video get, the more awareness Opendoor gets. So like, comment, and subscribe. Take care.